Hey, it's John Hope Bryant, and this is the Money and Wealth podcast series for Black Effect Network Podcast Network. This is a Black Effect presented program called Money and Wealth with John Hope Bryant on the iHeart Radio Network. We're going to get into a topic today that's really important. It's called How Banks Work. Now, this may seem obvious to many folks, but truth be told, people don't know how banks work. They assume, they presume, based on comments that I field on social media all the time, and people who are honest enough to have a real conversation with me when they're not embarrassed and they just tell the truth. They actually don't have much of a clue how this system works, and for lack of knowledge, we then make a lot of assumptions. Some of the assumptions are correct, and many of them are incorrect, and they can be detrimental to your financial health and your wealth building success. You cannot build wealth in America. Listen to me now. You cannot build wealth in America unless you truly understand this banking system. It is one of the miracles, one of the modern age. The banking system was created so long ago. It's arguably one of it's the first or second earliest businesses in the world. Yes, I can't tell you what the first business was. You can maybe guess. It was one of the vices of mankind. And it's been joked that banking was created to finance the first business. That's a joke, but not far from the truth. And given that barter and trade in its earliest forms, I'll get into that in a minute, really were tied to what we now call the banking system or a banking system. And it is global. This is a global system. You cannot today build a community without banking. The only time Jesus got upset was when he overturned the tables of the money changers in the temple. And that shows how, insidious that bad banking, bad capitalism, bad finance can be. I'm here to talk about good capitalism and good banking, but also to explain the history of bad banking, because there's a good reason why people are hesitant about it, why minorities don't trust banks and assume or presume that banks are racist and discriminatory. And I'm going to really get into this because there's no question that there's a history of banking that is discriminatory and even racist. I'm going to walk you through how I believe that there are different realities in place today. Yes, racism and discrimination still exist. Of course they do. Racism is like rain. It's either falling someplace or it's gathering. So you might as well get out an umbrella in a color you like and start strolling through it, because it's not going to change. So you must. Over it, around it, through it, we're going to get to it. But the modern is, again, I love math and facts because they don't have an opinion, and particularly math. And I'm going to just walk you through the math and show you for yourself, unpack this for yourself, and you see that today is the best opportunity you've ever had to chart your own course of financial liberation. Before I get into literally walking you through how banks work and where banks came from, and walk you back through where we are today, let me tell you very quickly my own personal story with banking. Some of you have read this in my book, Financial Literacy for All. If you've not gotten that book, it's a bestseller on business finance in the country today, the #1 bestseller. Go get your copy. It has almost a 5-star review on Amazon. You can get it at Walmart. You can get it at Black bookstores, by the way. You can get it at Barnes & Noble. Globally, the book is available. I walk through the story. But for those who haven't heard the story, I'm the founder of Operation Hope, by the way. I'm about to bring that into this whole situation. I'm going to give you the short version. My mom and my dad went to the South, came from the South to Los Angeles. Again, the details are in my book, so I won't bore you with that. I want to cut to the real meat of this very important podcast this week. They built wealth together. generational wealth, I would argue. They owned a gas station, an apartment building, an 8-unit apartment building, and they bought for $18,000 that was ultimately worth in the time that my mom and dad were married. Well, they could make the payment for less than $250 a month. They lived in one unit, rented out two. Well, they rented out 2 units. I would pay the mortgage. The rest of it was profit. Today it would be worth about $6 million. We lost it. We lost the gas station worth millions of dollars. We lost it. We lost the home that we were in, et cetera, et cetera, et cetera. Because my dad could make the money but couldn't keep it. The more money he made, because he was financially illiterate, he was brilliant in many ways, a natural hustler. Johnny Will Smith. I got my business bones from him. He got his business bones from his daddy, my grandfather, R.B. Smith, who was a sharecropper born in Mississippi in 1871. My second great-grandfather, George Young, was in the Civil War, fought for Abraham Lincoln's Union cause for freedom, even though he was enslaved, and protected Memphis, Tennessee. He was part of the Black Troops Regiment, one of 7,000 officers in the Union Army during the Emancipation Proclamation. That's where I get my social justice bones from. Coming back to this story, mom and dad built a little empire, and my dad confused making money with a profit, and didn't know that my mother was a great saver and she was a financial genius in the family, and they could have worked together and built something, but they didn't. My dad didn't see my mother as an asset as he should have. He just thought she was cute. And well, that was my dad's failing. My mother, Juanita Smith, was a financial genius and died, passed on to glory, promoted last year with $1 million cumulative net worth, meaning if you'd added up all her assets, including what she distributed to her kids and homes that she'd built and bought and sold, she'd had $1 million net worth, working an hourly job with a credit score that at that time would be 854, I believe it was. It was over 850 back when the credit score model went over 800, 850, went over 850. And she lost, well, they lost it all. My mom actually did very well. And, but when I moved with my mother, and again, I'm jumping over a bunch of the stories here because I had a bunch of run-ins about money in this story that were tragic. The guy who saved my life was murdered in front of me over money, and my best friend was murdered down the street over money, all before I was 9 years old. So, okay, now I'm 9 years old. This is the crux of this story. I go to my classroom, and this banker, who happened to be Caucasian, and I'm pretty sure he was from Bank of America, was teaching financial literacy. He was in a beautiful suit. It was a white shirt, a red tie, and a blue suit. It was beautifully stitched. And I make note of that because the only white man I saw growing up wearing a suit back in those days was a detective, and it was not a good suit. It was a bad suit. I don't mean a bad suit. I mean a bad suit, like a really horrible suit, like a cheap suit, like polyester. And this dude was smooth, man. He was classy. He was wealthy. It was obvious. His car was in the parking lot, and it had tags on it, and a license plate. It was brand new. He was there in the middle of the day. I didn't know what his salary was. What the heck was my mother was on an hourly rate. He had a business card, said 16th floor. What the heck is that? There was nothing in Compton that was that high. The tallest building in Compton was the Compton Courthouse. He lived in the neighborhood, not my own. He came and went as he pleased. He was on a salary. He was a corporate executive. And so the first week, we didn't talk much. Like, he was adversarial to us. He didn't want to be there. We didn't want him there. And he was there because of the beginning of the Community Reinvestment Act. I think that was the first year, or there was a concern that was coming into law the next year, I believe it was. And so his bank sent him there to teach us financial literacy, home economics class, which doesn't exist anymore. We didn't want him there. He didn't want to be there. He came in once a week for 6 weeks for 45 minutes. The next week he came in, he said, you kids aren't so bad. Yeah, we said, you're not so bad for a white dude. So we started to build a bit of a rapport. You said, you remind me of my children. And so we started to build a rapport, right? It became a human interaction. I don't know, third or fourth session, I started Model the Banker. I started listening to what he was saying. It was fascinating to me. And by the third or fourth session, I believe it was the fourth session, I asked him, what do you do for a living, man? And how'd you get rich legally? He said, I'm a banker and I finance entrepreneurs. I said, sir, I don't know what an entrepreneur is. I never heard that word my entire life. French word, build something out of nothing, create value. But whatever it is, if it's legal and you're financing it, I'm going to be one. That's the moment I became an entrepreneur. Again, the story of that and what I did with that is it's another parallel story. You should check that out in my book, Financial Literacy for All, or my book, Up From Nothing, or one of the videos that are available online that chronicle this story as a source of inspiration for yourself. Up from nothing. I'm from the bottom of the economic pyramid, both income and wealth, to the bottom of the top 1% in this country, legally, paying my taxes, working hard, hustling, working by the rules, playing by the rules, no shortcuts, no government grants. There's nothing wrong with the government grants, but that was just not my part of my deal. No inheritance, nobody hooked me up, no legal activity. I did it all by the books, and I didn't do it. I love my brothers and sisters in entertainment and sports, but I didn't do it through entertainment and sports. I didn't do it through the government. I didn't do it through any of the traditional routes that you hear of African Americans succeeding. And hopefully this is an inspiration for you that you can go right down the middle and kick the door in like this. I believe in the James Brown version of affirmative action. Open the door, I'll get it myself. I want you to be dangerous, as my friend Tim Burt has said, not just famous. I want you to be dangerous. That means I want you to be intelligent from the neck up and win because you have earned your seat at the table. So this banker told me he was a banker. He financed entrepreneurs. I said, I don't know what an entrepreneur is, but if it's legal, I'm going to be one. That's who I am and what I am today. Again, the rest of that story you could read about. And then I asked him this other question, and I started wearing a suit the next week. They came in dressed like him. I got beat up every day, but that made me an individual. That began the process of being an eagle. And eagles don't fly in packs. The road less traveled. Scott Peck's book, Dr. Scott Peck, The Road Less Traveled. That book's probably 30 years old, 40 years old by now. I would recommend that's a recommended reading for you. When folks are going to the left, you often have to go to the right. If folks are going to the right, you may take the road less traveled to the left, the other left, and find your own pathway, just like I did. People, derided me and teased me about financial literacy and all this stuff my entire life. Now everybody wants to know. Help me explain to them, how does this system work? We got to make smart sexy again. We've been making dumb sexy for way too long. We dumbed down and celebrated it. It's time to make smart sexy again. So I asked this banker another question. Okay, banker, I now know what my vision is, but you mean to tell me your job is to loan poor people money? Yes, that's my job. I mean, you got to prove you can pay it back. But my job is to loan people who are striving with money. And all I got to do is to have a plan and to prove I can pay you back, that I'm credit worthy. Yes. And I don't get dead if I don't pay that money back. He laughed and said, no, I'm not going to kill you. Why would we want to kill you? You're our prime asset. We're loaning you money. We want you to be alive. But in my neighborhood, if you didn't pay the money back, you got dead. Like you went to the wrong street, did the wrong thing, said the wrong thing, and did pay somebody's money back. You were a 0, 0, 0. I remember I borrowed money for one of my enterprises. I was selling clothes, Fila and Alessi sportswear. Remember those? For those old enough to know about Fila and Alessi sportswear, I'll tell that story in one of my podcasts. But I was selling it out the back of my trunk of my car, and I had borrowed some money from the wrong dude. And all these people who saved my life or could have took my life, I really wish I remembered their names and could go back and say thank you to them for cutting me a break. This is one of the brothers, black man, who cut me a break. He was a gangster from my neighborhood. And I borrowed money from him. It wasn't a lot. But when I went to go pay him back after I sold some goods, he said, no, man, you can't pay me back. That's not the way this deal works. You indebted to me for life. I had no idea what he meant. And clearly the look on my face, he knew that I didn't know. And he's like, man, you shouldn't be here. He said, you just shouldn't be here. You've got potential. Like, I'm gonna let you pay me back. Don't ever come back here again. And I learned a number of valuable lessons, right? And that black man saved my life. There was another black man who literally saved my life, OC. I was dying. I was swallowing my tongue. My mother saved my life, told me she loved me every day of my life and invested in me in every way possible. And this white man also helped to give me direction in life when he talked to me about banking and how this system works. So when you look at Operation Hope today, so when he told me that, and I said to him, are there more bankers like you? He said, there's got to be hundreds of thousands of bankers, maybe 1 million bankers. There's 10,000 banks back then, 4,500 banks today. There's got to be 10,000 bankers in America. He said, banks in America. There's got to be at least, a few 100,000, maybe 1 million bankers. And all of us have the same mission. And I'm like, wait a minute. All my struggling friends, if they figure out what I figured out, they can access capital, get a loan, get access, get a relationship with somebody who's got some wealth, and get some relationship capital and come on up. Yes. So if you look at Operation Hope today, the largest financial literacy coaching organization in America, essentially that's what we're doing today. Is that this is one of my 5 divisions of John Hope Bryant Enterprises or John Hope Bryant Holdings, but it's the thing I'm most known for. So proud of it. Operation Hope, 501c3 nonprofit, which is the biggest in the country, $4.5 billion of capital directed to underserved neighborhoods, and partnering with rate corporations and all that stuff and government. But yes, banks. We're the only nonprofit allowed in history to operate inside of a bank branch, an FDIC insured bank branch. So if you're just clicking in, you're at minute 16. We're about to get into the depths of how banking work. If you want to refer this to a friend, they have limited time, then they just tell them to go to minute 16 and start this conversation with me on how banks work. Let me now get into it. Banks are, and I mean this in the most positive way possible. It's going to sound a little ratchet, but I mean it seriously. Banks are gangster. And I don't mean that in a negative way. I mean, this is people sleep on banking. This is one of the most incredible business models I've ever seen in my life. Check this out. You're starting a bank, if you're lucky enough to start a bank. And for every dollar that the depositor puts up, you're responsible, okay? Either a depositor puts up or you have assets, right? In the form of loans that are creditworthy or assets on your books. For every dollar on your balance sheet, you're responsible for about 7 cents. Now, it varies. It could be as low as 6 cents. It could be as low as 4.5 cents in some cases. But with the different buffers and things in place, it's going to be about 6, 7 cents minimum. It's called Tier 1 capital and a little bit of buffer. And then more like 10 cents on the dollar on average for all of the things that a bank's responsible for to keep in reserve, et cetera, so bank regulators don't get nervous. But check this out. You're a private business. You have private shareholders. Your mission is to make a profit, okay? And you only have to put up 10 cents, 7 to 10 cents for every dollar that's on your balance sheet. But you get the benefit of that whole dollar when that loan that you're going to give, and I'm going to break this down in a minute, pays you back. And it's guaranteed. Your enterprise is the only business in America, I can't say this without smiling, guaranteed by the full faith and credit of the U.S. federal government, the biggest government in the world, backing the biggest economy and the only flight to quality economy, the only money center economy, the biggest GDP economy, the most credible economy in the world, the United States of America, the federal government, the FDIC, Federal Deposit Insurance Corporation. Did you know what that meant? FDIC guarantees every bank in America. There used to be 10,000. When I was growing up, it's more like 4,500 banks today. And so they were the only business it's the only business backed by the full faith and credit of the federal government. Check this out. Think about this. This is wild. And that model only requires you to put up 7 cents of the dollar. And these banksters are walking around, in these very conservative suits and living very conservative lives, but they really have the slickest, most amazing business model on the planet. And I applaud them. I want them to do well because their job is to empower entrepreneurs like me and others. And it's a dynamic tension between that entrepreneur and that banker. The entrepreneur is to keep you on the road. The banker's job is to keep you on the road. So you don't roll into a ditch if you're an entrepreneur, a small business owner, or drive into a ditch. And the entrepreneur's job is to drive forward toward growth, toward profitability. So you've got this entrepreneur that sort of scares the banker, this business owner whose dreams scare the banker. But the banker's job is to be sober and sort of disciplined and responsible and sort of make sure that this entrepreneur business makes sense. There's an old joke: a bank will lend you money when you can prove you don't need it. I'll get to that in a minute. It's a joke. but it's not far from the truth. You got to look like you're not a big risk. Stop thinking that you go to a bank and looking like you got risk all over you with a low credit score, high debt, no money in the deal, whatever, and think the bank is not a venture capitalist. A bank is, again, FDIC insured. The government will take them over if they screw up. So here's the fundamentals now of why that bank, and basically, just to cut to the chase, the bank makes their money by the difference in the interest expense between what they're going to pay on your deposits. So you're putting in money in that bank, depositing it, and you're depositing it because you know it's backed by the full faith and credit of the federal government. And let's just say the bank's going to pay you 2%, 2% for your money. I'm just making this up, 2%, 3% for your money. Okay, maybe a little bit more, different kind of account, whatever. And the bank's going to loan that money back out at, let's say, under current interest rates at 7, 9, 10%. The credit cards might be in the teens, but there's a higher default rate for credit cards. But let's assume that they're going to loan that out at 10%, just to make this simple, and they're charging you 3%, paying you 3%, 4%, and there's an administrative cost for them to run the bank. Let's call that 2%, 2 to 3%. So now the cost is about 6%. You follow me? They're charging you as a loan for your Range Rover or your car, or for your mortgage loan, or for your whatever it is. Your indebtedness to them. They're charging you 10% in this example. Their profit is 3%. Fair exchange is no robbery, as my friend Rod McGrew would say. Why are you hating on the bank for making 3%? They made sure that you had the capital in place so that you could get whatever it is you needed, if the case of a business loan, where you're going to make multiples more than they're going to make. By the way, you're going to make more money. Wealth makes more money on wealth. Money makes more money on money. Money is made on top of capital and assets than it is you just making a living. That's a whole nother video for another time. But if you're a business owner and you're taking this money, putting it to work, you're going to make 10x, hopefully, what that banker is going to make. You're not concerned with the banker making 3%, but because if the banker wasn't there, you have no access to capital at all, maybe, in this example. Here's core functions of banking. Okay, begin to write this down. And we're going to get into discrimination and all the stuff and why it didn't work for people of color and women also in a minute. But I'm just giving you the functions here. Accepting deposits, savings accounts, checking accounts, certificates of deposits, okay? I remember I was starting Operation Open, I would break CDs, certificates of deposits, all the time, $25,000 CDs. I'd break them to meet payroll. I'd hand a CD to Rachel Duff. Back then it was physical. These were physical instruments, documents you had to fill out. Everything's digital now. Checking accounts. I remember the joke was, I can't be broke, I still have checks left. Anybody old enough watching and listening to this know what I'm talking about? Can I get an amen? Remember floating checks? Remember that? You'd send a check and then run around for 2 or 3 days. You write a check, run around 2 or 3 days, trying to cover that check before it hit. No, I never did that. Of course I did. And I honored all my obligations. You can't do that stuff now. Money is digital. It's immediate, right? All right, and then so that's accepting deposits. And then the bank pays you an interest return on those deposits. Providing loans, all right? This is where it starts to get interesting. Personal loans, unsecured loans for various personal needs, typically unsecured. Mortgage loans, these are loans secured for purchasing real estate, secured by the property itself. Call it real property, okay? Business loans, loans to businesses for expansion, operations, or other needs. Credit cards, revolving credit lines that allow customers to borrow up to a certain credit limit. And this is the biggest way to impact your credit score, is to reduce your consumer credit card debt to limit ratios. Again, the best way to get your credit score up, the number one way to get your credit score up, per my Hope Financial coaches at Operation Hope, out of everything else you're doing, my credit score fluctuated recently by like 30 points because one of my credit cards went up because a member of my family was using it and I wasn't aware of it, even though my rest of my balance sheet is incredibly large. But that one element caused a disproportionate impact on my credit score, me, John O'Brien, right? And so I had to pay that credit card down. And because the ratio of what I owed to the limit of what I could charge was too high. You want to get that down to 20, 30% of your limit to get the bet credit score of your, yeah. So if you have a limit of 10,000, you want to be no more than two or $3,000 to get the best credit score impact. Even 10%, 15% would be great. 50% the limit is not bad. You don't want to be at 70, 80, 90% of the limit. That starts making the banks nervous that you're, you know, living beyond your means or living through your credit cards, which a lot of people are doing, by the way, right now. So I'm not picking on anybody. Now, point number 3, payments and settlement services. This is another business that banks are in. Money transfers, facilitating the movement of money between accounts and across borders. There's individual companies that are in this business too. Western Union and other companies are in this business, but banks do this. Check clearing, processing checks and ensuring the transfer of funds between accounts. And this is aided by the Federal Reserve. That's what one of the things the Federal Reserve System does, is help with the check clearing process. And you have companies a lot of companies in Georgia are the backbone of the financial services system that are helping with this process. You never remember the check systems growing up? You didn't want to be on check systems. That was not a good thing. That meant you bounced checks. That's not owned by banks, I don't think. 4, investment services, brokerage services, buying and selling securities on behalf of customers. This activity is not guaranteed by the FDIC. Hello. Just because you're at a bank does not mean that all the functions of that bank are guaranteed by the FDIC. Did you know that? Most of the investment functions are not fully guaranteed, like your deposits are. Up to X dollars for your deposits at a bank. Wealth management, providing financial planning and investment advice. Mutual funds and ETFs. Offering pooled investment products. These things I just mentioned to you, investment services, typically are not covered under FDIC insurance. Check with your banking and financial services provider. 5, safekeeping and custodial services. Safe deposit boxes, secure storage for valuable items. Custodial accounts, managing assets and securities on behalf of clients. Think about trust activities. Trust, you ever heard of trust bank of the whatever? Okay, so that's, that's a whole nother part of banking, but I don't want to get into it. I don't want to get into a whole sidebar of another type of banking. I'm gonna stay disciplined so I can get through this in one podcast. Let me know if you want me to go deeper in another podcast into any one section of this of banking and go down the rabbit hole. I'm happy to, by the way. Get back focused again. How banks make their money. Interest rate spread. Again, this is what I said earlier. The primary way banks earn their money is through the difference between the interest they pay on deposits and the interest they earn on loans. This is known as the interest rate spread. This is why people's, brothers like, yo, man, I don't want no mortgage on no house. You know what I'm saying? I don't know what you're saying. I can't understand you. I don't say, if I buy a house, I don't own the house. The bank owns the house. If you don't pay, yes, that's true. In fact, if I loan you money, I've said this several times, it amuses me. If I loan you money, you're a friend of mine, you're a family member, I love you. But if I loan you money, the Bank of Bryant, and you don't pay me, I'm going to own your house. Real talk, because business is not personal. Can I get an amen? This is a church of what's happening now, and what have you done for me lately, right? So the interest rate spread is the difference between what they're earning, what banks are paying on deposits, the money you're putting on deposit at the bank, and the interest they're earning on loans. So they want to get the highest rate return they can on these interest rates on these loans, which will come into discrimination here, conversation in a second. Fees, accounting fees, monthly maintenance fees, overdraft fees, and other service charges. This is a way that banks can make money. Transaction fees, fees for wire transfers, foreign currency exchanges, and ATM usage fees. When you go to the ATM machine, it doesn't mean all the money, okay? It means something else, right? And when you go to that machine and you pull that money out, you'll see it says, depending on the bank you go to, it says $2. It used to be $1, by the way. Then it was $1.50. Then you see now it's $2.50, $3.50, $3.95. It's going up. Again, fair exchange, no robbery. What is it worth for you to get that money from on the run when you needed that moment? You don't have to take it. You can see that fee and say, no, I said the word no. I'm not going to pay that fee, and I'm going to go get the money from my mother, my sister, my father, my wife, or husband, and no, I'm cool. But if you hit that button, you're paying. If you're pulling out $200 and you're paying that 350, 395 fee, well, that's the cost of doing business. That's one of the ways that, in this particular case, banks can make money. Um, what else is there? Investment income. Banks invest in securities, bonds, and other financial instruments to earn profits, earn returns. Advisory and brokerage services, fees for providing financial advice, investment management, and brokerage services. The regulatory environment. They're regulated by, as I said, the FDIC, the OCC, Office of the Comptroller of the Currency, the Federal Reserve System. It's in some cases CFPB, the Consumer Financial Protection Bureau. It's in some cases state regulatory agencies. Every state has a banking regulator. The Federal Reserve System, I've already mentioned that. Most banks, national banks, are regulated by the OCC, the Office of the Comptroller of the Currency, which regulated, by the way, the Freedmen's Bank, which was created in 1865, chartered to teach freed slaves about money. That's the bank that the building I helped get renamed in 2016 by Secretary Jack Lew. Thank you, Mr. Secretary, for renaming the Treasury Annex building the Freedmen's Bank building in honor of former slaves who put every dollar they had in a bank that ultimately failed after Lincoln was assassinated. And that's one of the reasons that the black folks are, wary about banks. Wary about banks is because that bank duped them. Frederick Douglass tried to save that bank, by the way. Types of banks. Commercial banks offer a full range of services to individuals and businesses. Investment banks, they specialize in underwriting, facilitating mergers and acquisitions, and providing other investment services. In many ways, Operation Hope is a nonprofit investment banking organization. In the way in which we do things, we take all these disparate assets and opportunities, we structure them together so the whole is more than the parts, and we create solutions for the government, community, and the private sector, and you. We're the America's first nonprofit social investment banker. I started that 32 years ago. $4.5 billion invested so far, millions of clients, 300 physical offices, 1,500 satellite offices. That's Operation Hope in most banks in the country. We're getting the bank out of the no business and back into the yes business at scale. I'll get to that in a second. A lot to get in on the second half of this podcast, but I wanted to break this down. People have been asking me for this. Retail banks focuses on individual customers, offering savings and checking accounts, personal loans, and credit cards. That is where most of you are doing your business, with a retail bank. And there are good retail banks today, and they have an incentive not to discriminate against you. Again, I'm going to get into when they did and why they probably are not trying to do that now. And if it is, it's probably some individual at the bank that's hating on you, not the institution itself. Again, I'm going to tell you why in a minute. Central banks, national banks that manage money, monetary policy, issue currency, and regulate the banking system, i.e. the Federal Reserve in the U.S., the big baller of all banks, the biggest baller of all ballers, the biggest bank of all banks. The only one that can print money is the Federal Reserve. And I know a lot of the Federal Reserve presidents. We have a black Federal Reserve president right here, right in Atlanta, Georgia, Raphael Bostic, a very good guy. You had a black man who was vice chairman of the Federal Reserve when 9/11 happened, by the way, and because of Greenspan, then the Fed chairman was out of the country, he was in charge of stabilizing the biggest economy in the world and did a great job during 9/11. Great guy, and he's a friend of mine as well. The role of technology. Modern banks are increasingly relying on technology, and I believe that modern banks are going to move into this area of emerging markets, which is people of color, which is a far cry from where they started. So now let's go into discrimination by U.S. banks in the banking system, and then I'll come back to sort of the timeline of how banks got to where we are today and where we are today. So discrimination by U.S. banks was significant 100 years ago. I mean, like horrible, like disgusting. And a bank was 100 years ago owned by the family of racist Inc., right? Or the family of Joe Blow. It doesn't mean they were racist, but it does mean that bank, if that family was racist or they had backwards views, they could write policies that completely, without question, discriminated against people of color. This is called the segregation of the in the Jim Crow laws of it of you don't even need to go back to the 1800s, which was horrible. The 1920s. This was Jim Crow era. During the 1920s, racial segregation was legally enforced in many states under Jim Crow laws. Legally, it was a law of the land. This institutionalized racial discrimination and created significant barriers for Black Americans in particular, including banking. Again, when I tell you, you can't grow without having a good banking system in your community. It's really hard to build a community or wealth. And one of the reasons that Black people have less than 10% of their white counterparts is well, hold on for a minute. Really read my book Financial Literacy for All, because it deals with land and a bunch of other stuff. But I'm going to give you the banking side here in a second. And it really wasn't banking's fault, this particular part. Lack of access to banking services. Black Americans had limited to no access to what I mean by that is redlining. So for anybody listening to this, what do you mean, John, it wasn't banking's fault? You just said it was banking's fault. Okay. If you were a racist bank, yes, you could discriminate against Blacks. But the biggest problem that Blacks had with redlining wasn't the banks, it was the government. So hold on. Lack of access to banking services. Black Americans often had limited access to mainstream banking services. That's why the Freedmen's Bank was so important. That's why the bunch of Black banks that were started were so important. And there was a time where Black banks really thrived, and there could have been Black banks could have been multi-billion-dollar banks today, but they were hated on, and discriminated against, and held back. And now that banking is taken off like a rocket, it's hard for small banks to become big, irrespective of their cultural heritage. Particularly with the cultural heritage, it's hard for them to get into the billions and tens of billions of dollars of assets. So I think we've got one or two banks now that are Black controlled that have $1 billion, technically $1 billion in assets. Milton Jones is one of the few Black men, used to be with Bank of America, who created $1 billion institution. And he wasn't supported. That institution was dismantled. And there are a couple of banks today, again, that have a $1 billion threshold. But that's a very small bank in today's banking environment. And I'll explain why that's important. Discriminatory lending practices. Even when Black Americans could access banking services, they often face discriminatory lending practices. Banks routinely denied loans to Black applicants or offered loans at much higher rates just because to their white counterparts, just because they could. Redlining. This is really important. Redlining was rampant in the early 20th century, and it was endorsed by the government. The government literally took a map and they took a pen and they put a red line around what they call dangerous and risky neighborhoods. Now, these were the same neighborhoods where former slave people came from the South, tried to migrate north for a better life, and because they weren't given opportunities and could get jobs and access to capital and blah, 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 they concentrated in areas that became higher in crime, blah, blah, blah. It was poverty by design. And so they said, oh, that's a very risky area. We're not going to guarantee mortgages, we, the government, in those areas. We're going to redline again. And what do you think bankers did? Bankers, even the best banker, even the nicest person in the world, is risk averse. What did I tell you? They cannot go out of business. The government will take them over. And they have very thin capital to assets. So they can't make many mistakes. They can't make many bad loans. So you could be a complete saint, but capital's a coward. Capital is trying to find a safe place it wants to be a safe place to sit at the highest return with the lowest risk. Listen to me. Banks want the highest return, the lowest risk, and a safe place to sit. That's what every provider of capital wants, even if you're a saint. And so here you have these neighborhoods and government said are redlined, and the government's not going to guarantee a mortgage. So where'd the capital go? It went to the places that were greenlit, which were white suburban neighborhoods, and the banks made loans there. So they could have been racist. They also could have been a saint, but they just were like, I don't want to lend over there. I'm going to lend over here, where it's low risk, high return, or guaranteed return, near guaranteed return. And I'm not going to be taken over by the banking regulatory agencies, and I'm going to get my loan guaranteed, which means that the loan was dang near risk-free in those cases. So little known fact, it was not the banks themselves that instigated redlining. It was the U.S. federal government. The government did a lot of bad stuff to incite inequality and I would just say now they're trying to make it right. Economic inequality, became embedded, and there were legal protections that were put in place to help you out. The Civil Rights Act of 1964, with my hero, Ambassador Andrew Young, and his friend Dr. King, helped to put in place. My shero, Dr. Dorothy Height, and other women also helped in this movement. The Fair Housing Act of 1968, which was passed when Dr. King was assassinated, in honor of him, really. President Johnson did that in honor of him. And the Community Reinvestment Act of 1977, which is the law that I really wrap myself around. CRA, the Community Reinvestment Act. Everybody write that down and research it. It's about $500 billion a year. That's right, $500 billion a year that is directed to investment, lending, and service. Investment, equity, lending, debt. Both of these are forms of capital. Debt and equity are both capital. Investment, lending, and service, volunteerism, like the banker who came in my classroom to teach financial literacy. So now you know why that banker came in my classroom, because the bank got credit for teaching financial literacy in my neighborhood. You want somebody to teach financial literacy in your neighborhood for free? Go to your local bank, and they'll be enthusiastic, if they have half a brain, to come and teach a class for your club, your Links chapter, your Boys and Girls Club, your nonprofit, your school, whatever. That's exactly what happened. And you get a bonus. You get a role model that's coming, so you can model what you can see, because people want to be what they can see. And I saw this banker with a suit on, and I ended up wearing a suit myself. I'm not a banker, I'm an entrepreneur, but I ended up suited and booted, just like that banker was. So you have legal protections, increased access to banking services. This legal infrastructure has made it harder for banks to discriminate. And banks, and like corporations and every other capitalist and every other free enterprise entity, respond to incentives and penalties. And so the penalties are higher to do wrong, and the incentives are higher to do right. Right. So the pendulum has shifted, right, in the last, let's say, 40 years, 50 years. Now, there's been significant progress in providing equal access to banking services. Many banks now actively seek to serve underserved communities, minority communities, often spurred by regulatory requirements like CRA and community advocacy. Now, while overt discrimination is illegal, subtle forms of discrimination and bias still exist. All right, so I'm not crazy, I'm not naive, I get that. Financial literacy and economic inclusion, stuff that I'm really specializing in. I call it civil rights, from civil rights in the streets to civil rights in the suites, is a way that I think is a great level of the playing field. And I love credit scores. As anybody listening to me, you know, I love credit scores because, again, I like math because it doesn't have an opinion. And I love computers, and I love what artificial intelligence and computing and technology is going to do to this, because when my mother went to the computer at midnight and said she wanted to get an auto loan, the computer wasn't some lady looking over at her and trying to discriminate, looking at her and saying, do I like you or not? It was a computer, and my mother put in her credit score and her income, and as long as her income was satisfied, she could afford to prove she could afford to pay for it, the car that she wanted, and her credit score was satisfactory. Anything over 700, you're a star. 750, 800, you're a superstar. The computer just said yes, approved her at great rates. The computer didn't see her as black or white. The computer saw her as green, right? The color of U.S. currency, of prosperity. You follow me? And now here's a sad fact, and this is not our fault, but it doesn't matter what's your fault now. I believe in a James Brown version of affirmative action. Open the door, I'll get it myself. I want you to understand that this is where we are today, and I want you to improve yourself versus harping on 200 years of history that, more than that, as you'll hear in a minute, that you can't change with recent history. Let the legislators, the civil rights leaders, historians, and policymakers change that. I want you to change your life. Half of black folks have a credit score below 620 today. Now, poor whites aren't much better. They're about the same. Latinos are just above that. But the lowest credit score in the country on average are the people who've been discriminated against, in my opinion, the most in this country actively, which are African Americans. It makes sense. But that means that half of us wake up in the morning and we're locked out of the free enterprise system. Hello. You can't get a good mortgage below 700. You can't get a small business loan, certainly below 700. It's risky credit. It's considered risky credit. You can't get, good credit cards. You can't. You can't get an auto loan at 500 credit score. As I said on another podcast, that's not a at 500 credit score. It's not a Mercedes. It's Mercedes payments. So uh, the number one thing you can do is to work with a whole financial coach, because I know the criteria why a bank's going to turn you down. Now, let me deal with this whole discrimination thing. Like right now, I mentioned 100 years ago, yes, racism was real and it was rampant in banking because the bank of Who's What's was owned by the Who's What's family in the city of Who's What's. Okay, and they just didn't like black people, and they said we're not lending to you. Today, Wells Fargo, Bank of America, Citigroup, who else? U.S. Bank. I'm just picking them out now. Bank of the West, they just were bought. Um, PNC Bank, Regions Bank, Synovus Bank. I can go on and on and on and on and on. First Horizon Bank. These are publicly traded institutions that you and I own stock in. Now you may say, I don't own stock in them. If you have a 401k plan that your employer and they invest in a broad basket of investment grade stocks, yes you do, right? So you can't say that's a white bank anymore. That's your bank. If black folks own stock, white folks, Latinos, Asians, Indians, everybody owns corporations, governments, pension funds. If you're a teacher, your pension fund manager may have invested, meaning the people who manage your pension fund or your investment account as a teacher, they may have invested in these major institutions, right? So the job of this CEO of a major bank that's publicly traded is to make some money. And if they're discriminating against you because you're black, they're not. You may be the best performing loan they've got. And by the way, they can't overcharge you like they used to, because now the big brother, the federal government, their biggest partner, is looking at them, looking over their shoulder. They're highly regulated today. It's a highly advantageous business model, has a lot of leverage and a lot of profitability for the banks. Again, if you have 7 cents of your own money, 10 cents of your own money in a loan, but the loan is paying $1, as long as that whole loan pays, that bank is getting multiples of their 7 cents in profit. And if $1 turns into $10, turns into $100, turns to $1,000 in loan size, to $1 million, to $1 billion, to $10 billion, $20 billion of loan portfolio. Just imagine the compounding effect of that group of owners of that bank, how much money they're making. By the way, if we're the shareholders, we're the owners of that bank. So a bank today, my rich friends need my poor friends to do better, if only to stay rich. In the model I'm talking about now, even a racist wins if black people do well, because the GDP, the economy rises, loans are performing. If you raise your credit score to 700, there's nothing more powerful than God or love than moving your credit score to 700. The credit score is 700, 120 points to 700. Nothing more powerful. So to move your credit score from 550, where the bank says no, you decline. You may think it's racism, but they're declining you because your credit score stinks. Your debt to income ratios are out of whack, means you have more debt to income than the average person, and you have low savings. And it's not your fault if, again, you come from the environment I talked about. But giving a loan to you today is not about somebody's fault. It's about qualifying for credit. And I mean good credit. I don't want you qualifying for the homeboy shopping network credit with these high rates and bad terms. I don't want you doing a check cashing, payday loan lending, rent-to-own stores, title lending, liquor stores, financing, hood financing in a 500 credit score neighborhood I grew up in. I want you to get 700 credit score. I want you to get rich people money, okay? I want you to get 700 credit score, 750 credit score, 800 credit score money, which is best rates, best terms. They treat you like a king, like you're a private banking client. I'm your private banker at Operation Hope. Are you getting what I'm saying? It's a lot of information in a short period of time. Please, in the comments, if you're watching this, then please put comments wherever you're watching it. If you've seen a clip of this somewhere versus the whole podcast, let me know. If you're listening to the whole podcast, please go to one of your social media platforms and say, John, I listened to your podcast. I'm telling my friends about it, and here's what I like the most about it. Talk more about this. This was very helpful. Make sure that you can tell me that I'm helping you learn this game and how to master it. So if you can get your credit score up, the computer, not a person, is trying to say yes. And the bank needs to make a profit. And they're going to make a profit by making a loan. But the bank is forced to be in the no business because your credit may be toe up from the flow up. As my dad used to call it, it wasn't credit, it was credit. He said his credit was bad growing up. So Operation Hope's job, working in these banks, right? Working, we're the only nonprofit allowed to operate inside of a bank branch in U.S. history. Operation Hope's job is to get the bank out of the no business. I'm sorry you declined for a loan, and back into the yes business. Yes, you're approved, and not just approved at market rates, at prime rates and terms. That's what I want. I want you approved at prime rates and terms. And I love going to airports, and the TSA agents in the airport are like, yo, man, yo, that's John Hope Bryant. Hey, man, I'm 690. Hey, I'm 670. I'm 710. Showing me their credit score, right? As I'm going through, and they pat me down going through security. I absolutely love it. People stop me. Hey, I became a homeowner because of you. Hey, I started a business because of you. Hey, I got a great personal loan or a line of credit for my business because of you. You know, hey, I started your 1 Million Black Business Initiative program, which has over 400,000 participants now, our partnership with Shopify. And as I was doing that program, I didn't realize I didn't even need a loan. I just had some sales, and Shopify gave me an advance on my next sale for my former sale, and I've been fueling myself through that, and so on and so forth. I love these stories, but you've got to understand how this game works. And I want you to use uh, good debt. There's good debt and bad debt, right? Good debt is where where you're loaning against assets that have the ability to appreciate, go up in value. You know, businesses. You know, mortgage on your house. You know, anyway, even your education can, I think, appreciates because you're smarter and you can earn more with a college education than you were with the high school education. You get a return on investment even on a student loan. So good debt is again something that will appreciate or can appreciate, and bad debt is financing. I don't know, clothes, jewelry. You know, most jewelry has an 80% profit margin on it. You know, that's not. If you ever need to sell that jewelry, you get your heart broken on what the pawn shop or whoever will buy it back for. So bad debt depreciates, good debt finances things that may appreciate. Did you understand that? You want me to do something just on debt? Let me know. I will. I want you to get good debt. There's no billionaire that's ever become a billionaire without good debt. Did you hear me? There's no government. There's no growing economy in the world that didn't get there without good debt. And guess who's financing the good debt? Banks. All right. I did tell you, this is one of the most incredible models in the world, banking. And I'm trying to break it down for you. Something that I've tried to master and tried to really understand. I signed a loan facility for $200 million on one of my tied to one of my private companies, a recapitalization. Actually, I didn't sign it literally. I didn't have to sign it. It was non-recourse debt. I sold that company, but it was nice to be a black man and not have to ask for a personal guarantee for a $10,000 loan, which happened to be my entire life at you know at nosebleed rates, meaning very high interest rates. This was very low rates, very good terms, so on and so forth. And we have about $4.8 billion of capital that we've accumulated and deployed through my entities over 32 years, and most of that in the last 15 years. And it's just growing, growing, growing. And again, prime rates is what I want for you. Okay, here's in the last time we've got left. Has this been helpful to you, by the way, to understand how this game works and how you can master it and why? Even if somebody's discriminated against you, we can make sure that that bank treats you well. We've got a great partnership with Wells Fargo. They've got they had some drama in the past. I was there when the drama unfolded, by the way. I was in the room years ago when I think people made really bad decisions, and those were people. That was not the institution itself. Again, the federal government depends who's there. Like the Biden administration is different from the former president's administration. Is different from the Clinton administration, the Obama administration, the Johnson administration, the Reagan administration, the Bush administration, and the Bush father is different from the Bush the son administration. Even though it's the U.S. Presidency, it's the U.S. federal government, but it's different because of who's in the seats at the time. So if you have bad people running a good institution, then it's a badly run good institution, and it'll be pimped, it'll be manipulated, it'll be taken advantage of, and that culture will permeate. So there have been times when these institutions were run well. There's been times when these institutions were run badly, and it shows and reflects in their stock value, their profit, or the lack thereof, the regulatory oversight, the public criticisms, and And I love the group that's there at Wells Fargo now. I love the group that's there at Bank of America. There's people of color at the higher ranks of these institutions. Both those institutions have ordered over 100 Hope Inside locations. And our mission is to get that bank out of the no business and back into the yes business. And I deal with the CEO, Brian Moynihan at Bank of America, Charlie Scharf at Wells Fargo. I deal with Jane, the CEO at Citigroup, who's a partner with us. It's kids accounts with Mayor Andre Dickens in the city of Atlanta. Every kid gets an account at kindergarten. And in the city of Atlanta, the child's savings account through Operation Hope and Citigroup and Operation in Mayor Dickens in the city of Atlanta. And the statistics show that a kid who gets a bank account at kindergarten, is 50% more likely to go to college. Hello. And if you put any money in that account, and we're putting $50 into each of those accounts and now asking banks to match it, the original money comes from the city, and we're asking banks to match it through our network of partners. You put $25, $50 in that account, the kid is 75% more likely to graduate from college. Hello, tying education to aspiration. We have 10% of First Horizon Bank branches in Tennessee, the largest bank in Tennessee. Brian Jordan, great guy who runs that bank. Synovus Banks put up $100,000 to match the money in the kids' accounts. That was just recently. That's their CEO. Key Bank, their CEO, Chris Gorman's a great guy. The CEO of City National Bank, Kelly Coffey, she just joined our Hope Global Board of Directors. We haven't done anything with her, but we hope to. They've had some rough patches, but they're trying to come back strong. Never let a crisis go to waste. People make mistakes, but that doesn't mean they are a mistake. If an institution has tripped and fall and made some mistakes, help them get up and do good. Help them do good for your community and show that they're a good institution. And all this stuff is sort of, it's transparent now. You can see who has a good CRA rating, Community Reinvestment Act, who has a bad one, who's been sued 1 million times and has all these fines and penalties, how long ago that was, and who's done corrective action. And then see what their management team looks like. See who's on their board of directors. See who their managers are, who their leaders are. Are they living their values? And again, there ain't no perfect, but I've been remarkably impressed with the trajectory, the trend line of progress. We're still waiting to see a black CEO of a money center bank, or even one of these super regional banks. You have money center banks, which are the top 4 or 5 banks, and you've got super regional banks, which are these behemoths like PNC and US Bank and et cetera, et cetera. I've already named the money center banks. Those are systemically important, most systemically important to the system of free enterprise and capitalism commerce. Then you've got, regional banks. They're still big, 100 billion, and then you've got community banks, and a community bank could be $50 billion a day. That's why I was saying a black bank with $1 billion is really outgunned in many cases. Now, if you want to put your money in a black bank, knock yourself out. I have money in a black bank. That black bank, though, may not on their own be able to give you the best terms that you're looking for, no matter how much they love you. It's not personal. They've got a higher capital ratio. They have less capital available, less assets available to lend. They can take less risks. They're going to be more conservative in most cases. They're going to ask you, unless they have a partnership with a major bank, by the way, they might. They're going to ask you for probably more down payment. They may have to charge you a higher interest rate because they need to pay for their overhead. It's not personal. So you may end up, because by doing the right thing, you may end up paying a slightly higher interest rate, slightly more cash down, slightly less than premier terms, even though you qualified, which proves that it's not just race that's in the mix here. If you want to support a black bank, and I encourage you to, I do it, right? Then put your money on deposit at a black bank. Give them a good loan. You have good credit, give them a good loan, and that credit card or the personal loan, whatever, and pay it back. And see if they have a strategic alliance with a bank, or have some kind of federal guarantee or something that will allow you to get access to big bank pricing at a small community bank feel, right? So two things can be true at the same time. I do business with a bunch of institutions. I do business with banks, money center banks, regional banks, community banks, credit unions. I do business with a broad range of institutions, and Those who give me the best deal for what I'm looking for gets the business. At the same time, I'm conscious and I make sure that I give back to my own community and I make sure that I have money on deposits and I'm doing business with black banks. And we have Hope Inside locations at black banks, including supporting Citizens Bank, which was the bank that Dr. King's father, Daddy King, served on the board of in Atlanta, Georgia. Did you know that? All right, we're getting long in the tooth for this podcast. I hope you've enjoyed this. Let me tell you real quickly, I've covered a lot of ground here and I've had no notes, so I hope that I did a good job of covering banking for you, the history of banking. Here's the history, the chronology. Starting 3,000 years before Christ was born. Yes. In ancient origins, Mesopotamia, that's the earliest trace origins of banking. It was records of clay tablets showing that loans were made and interests were charged. That's banking. Ancient Egypt, 2,000 years before Christ. Similar to Mesopotamia, ancient Egyptians, some black people, one could argue, maybe all black people, who knows? I don't know what they looked like back then, but it was hot. These were dark people. So they were brilliant. They used granaries and temples as storage and lending facilities. The concept of interest-bearing loans was well established. That's banking. The ancient Greece and Rome, that was 800 to 400 years before Christ. In Greece, moneylenders operated in marketplaces and some temples provided loans. In Rome, banking was more sophisticated and with professional bankers and deposits and credit facilities. That's definitely banking. They also developed the concept of checks and promissory notes. That was 400 to 800 years before Christ. Medieval period, 500 to 1500 years after Christ. With the fall of Rome, banking activities diminished a little bit, didn't disappear. They then reemerged. And the Knight Templars and folks actually in places of faith played a role. The Catholic Church later on became a very big player in the banking and monetary scene. Italy and the birth of modern banking, that was the 12th and 14th century. The Renaissance period saw the rise of powerful banking families in Italy, such as the Medici family in Florence. They developed new banking techniques, including double entry bookkeeping, bills of exchange, and letters of credit. The early modern period, the Bank of Amsterdam, that's 1906. The Bank of England, that's 1694. We don't have time to get into details here. I'm giving you the high watermark here. The 18th and 19th century, expansion of commerce banking. During the 18th and 19th century, commercial banks proliferated, especially in North America and Europe. These banks provided a wide range of services, including deposits, loans, and investment products. And let's just say this, they also financed slaves, some of these banks. If a bank was operating in the 1800s, early 1800s, they took slaves as collateral. There were banks that actually show on their records. By the way, one of the banks I didn't mention that we partnered with is Truist Banks, a good institution. Their CEO, Bill Rogers, great guy, was one of the people who took me and scaled my operations up. He acknowledged that the long history of this bank, involved in slavery and financing plantations who put slaves up as collateral. J.P. Morgan Chase has history of slaves being collateral for loans going back 150 years. Any bank that's that old has history of financing plantations and the slave trade, and they financed and sometimes took as collateral human beings. Yes, it happened. That doesn't mean the people who are running it today are racist. They could be the nicest people in the world. They can't, help what happened 150 years ago. But these institutions have, rainbows follow stars. You want to, again, try to find ways to let them come up and prove they're good for your community today. Truist is one of those, formerly SunTrust, is one of those institutions that has proven that. By the way, the head of banking at Truist is Dante Wilson, a black man. And Operation Hope is in 800 satellite locations and 50 real locations, physical locations at Truist. Of their 2,000 branches, we're in almost half. I commend them. I think they're doing a really good job. What was I talking about, Truist? Oh, anyway, I was just talking about the fact that any bank that's that old has a history in the slave trade. So that was the 1700s and 1800s. The Industrial Revolution period overlapped with this. Development of the stock market. Banks were involved in that period. The 20th century, the Great Depression, and the banking reforms of the 1930s, the Great Depression. That's where the FDIC came from. All bank regulatory agencies came out of crisis. Okay, so the FDIC came up because the banking system collapsed during the Great Depression and people's confidence went away. Right? I've already told you that the Freedmen's Bank preceded this in the 1800s, and that was a bank created by Lincoln to teach freed slaves about money, financial literacy, and to domicile their savings. By the way, 2 months after 40 Acres and a Mule. That's another podcast for another time. But that's also in my book, Financial Literacy for All. Post-war expansion, 1945 to 1970. That's when everything took off. Deregulation and globalization, 1980 to the 2000s. Financial crisis and reforms, 2008. That's a big mortgage crisis. Present day, digital banking and fintech. And I would argue artificial intelligence is coming. And I think ethical banking is coming back. I think emerging markets. I think the CRA, Community Reinvestment Act, is about to mean emerging markets in America. I think the DE&I think the title is been so abused. It's that title is probably gone, but diversity is key to the business plan for America. And I believe that banks are one of the entities that will lead the effort to say, hey, we need new markets to conquer, new places to make a profit. And I want them to make a profit, by the way. When I was doing this deal with Shopify, the 1 Million Black Business Initiative, I was on Roland Martin's show, and one of the callers said, why is Shopify doing this? Why are they putting up $130 million over 10 years to help blacks become business owners? I said, well, it's the right thing to do. Toby Lutke, the founder, is a good guy, friend of mine. But also, pause. They want you as a customer, right? They want to do well and do good. And don't you want to be a customer, or do you just want a handout? Do you want a handout or a hand up? They're like, oh, we want a hand up. Exactly right. So this is a James Brown version of affirmative action. Open our door, I'll get it myself. And in this case, Shopify was also acting like a quasi-bank because they finance your sales as you increase your sales through the technology platform. So I think that Community Reinvestment Act, that people of color, communities of color, diverse places are going to be, as we train these communities up and get them experts at capitalism and free enterprise and financial literacy, and get them strengthened, get their hustle strengthened so they have a business plan behind their great idea and their work ethic, which we have, because when the rules are published and the playing field is level, we kill it. We absolutely succeed when the rules are published and the playing field is level. Look at the arts, look at professional sports, look at, frankly, government service, look at the faith area. Rules are published, playing field is level, we absolutely succeed. And we're going to do it free enterprise and capitalism too. And I believe that emerging markets in America the regulatory environment of Community Reinvestment Act, CRA, is going to morph into emerging markets in America. The DE&I is just GDP, gross domestic product. It's just R&D. DE&I, call it what you want, is R&D, research and development, for future GDP, gross domestic product. I hope this has been helpful. GDP is the income for the nation, by the way. I hope this has been helpful. I love you much. This is John O'Brien. This is Money and Wealth. I didn't do the trending topics. I didn't do a fan question this time because this is an hour and 8 minutes. But I hope you enjoyed this podcast as I break down banking. Love and light. Go to Operation Hope. Go to take friends, subscribe to this podcast. Get my book, Financial Literacy for All. Sign up onto all my social media platforms. Tell your friends, and let's change the world. It's time to make smart sexy again. We've been making dumb sexy for way too long. We've dumbed down and celebrated it. It's now the time to make smart sexy again and get your credit score up.